Oh, whoa, that wasn't me. Hey, everybody, Real Estate Ninja here. I hope you're doing well. We've got bad news for the banks. It is the truth. These are really bad things that we're about to talk about. Unrealized losses that are going on in the bank's balance sheets right now, but most people could care less. And what you need to realize as a informed investor is that whether it be the banking sector, stocks, or real estate, it all comes down to one thing. It's called velocity. See, velocity tells the health, it proves the health or the sickness of a market. When you have a certain amount of home selling, then this is the normal velocity, things are good. If you have this many stocks trading hands, this is good, right? It's keeping prices pretty steady, or maybe they're a little bit on the rise, or maybe they're a little on the decline. But the velocity, by and large, is in this nice little pattern. But what happens is when velocity stops, it halts, comes to a grinding halt. And that's happened in the banking sector. It's happened in real estate right now. Then it gets scary because then the first person to the door is the one that wins. And then everybody starts running the door and velocity slams higher. And that's when you have a crash. On the most basic fundamental reasons for bubbles and popping of bubbles, that is what's happening. Now we're going to go over a story right now about from Wolf Street, and it's entitled "The Unrealized Losses on Securities Held by Banks Jump Higher by 22% to $684 billion in Q3 alone." This is a big deal. And why is it a big deal? Well, first off, it shows us that this is the reason why banks are having to run to the Fed for an emergency bailout. Every night, there are a lot of banks out there doing this. What blows me away is that people go, I've been waiting for this economic crash you've been talking about for a while. It hasn't happened. It has. The fact of the matter is, the Federal Reserve didn't even open up their repurchase facility until January of 2009. Moody's, S&P, and Fitch did not start downgrading government debt, the banks, until way after it was too late in 2008. As of right now, all of the major credit rating agencies have downgraded banks and the government's debt. No, or not the government's debt, they put them on watch. At the same time, the Federal Reserve has had the repurchase window open for quite some time now. 700 banks are insolvent because of what we're going to talk about. Now, here we go. Let me ask you this, just a quick little poll. Type 1 if you think the banks are crashing and the crash is ongoing. We've been in it for quite some time. Or type 2 if you think I'm crazy. It's cool. I get people call me crazy all the time. It says here, unrealized losses on securities, mostly treasury securities and government guaranteed mortgage-backed securities. You remember I told you that I did a video about 3 weeks ago on this channel, and I said, I'm going to show you something that you're not going to see on the mainstream press for about 4 months, and that is mortgage-backed securities are actually imploding right now. We've already seen commercial mortgage-backed securities crash. Now we're about to witness mortgage-backed securities crash. This is the coolest thing ever to be a part of. It said, at FDIC insured commercial banks at the end of quarter 3 jumped by 126 billion or 22% from the prior quarter to 684 billion, according to the FDIC's quarterly bank data release on Wednesday. These unrealized losses were spread over the 2 accounting methods. First, unrealized losses on held to maturity securities jumped by 81 billion for the prior quarter to 391 billion. Let me explain what that means. Let's say a bank goes out and says, hey, we want to allocate 10% of our holdings to held to maturity treasuries, bonds. We go and buy them, and let's say they have a face value, we buy $1 million worth, and they have a 5% rate of return. We're going to hold those and we're going to get the 5% per year until they fully mature. Here's the problem. When all of a sudden interest rates go higher, let's say to 6%, your $1 million worth of securities that you paid for that are yielding 5%, if you need to sell them, they are worth less, right? But most people understand this. 99% of the people out there understand you don't take a loss even if you buy a crypto or a stock at $100 and it goes down to 50. you have not lost any money unless you have to sell it. Because how many times have something gone down in value and you're like, oh, that sucks, I have less money. But then you wait a year and all of a sudden you sell it at twice as much as you paid for, right? So these are unrealized losses. But here's the problem. When a bank has these unrealized losses on its balance sheet, it becomes insolvent if that balance sheet is not enough to keep it within the Basel III or Federal Reserve requirements for the capital to loan ratio, right? For lack of better terms, I'm making this real simple. But every night, the bank has to do an accounting for how much it brought in deposits, how much it has in investments, and then how much it lent out as loans. And if those numbers don't jive with the Federal Reserve's requirements, which they operate still under Basel III, even though they're trying to fight it, totally different sidebar, then they have to go and borrow money. And usually they borrow it from a bank. And that's called the interbank lending rate. Here's the problem. The banks are all insolvent, they're all screwed, and so they're all having to go to the Federal Reserve. That's how bad this crash is. So next time you go and try and tell a family or friend and they roll their eyes at you, it's not that you're trying to warn them of something that's coming. It's already happened. Congratulations, you've crushed it. Go get new family and friends. I'm not joking. I've had to go through the same thing. Now, the second way it says, of these accounting methods is unrealized losses on available for sale securities jumped by 45 billion from the prior quarter to 293 billion. That's a big percentage change. Now, think about this. These are unrealized losses on available for sale, which means there are securities that banks are trying to sell at a loss and they're unable to as of right now. Okay? Gets better though. These paper losses occur predictably when interest rates rise, as yields rose in quarter three. Oh, real quick, can you mind telling me? I don't know if any of you heard, someone from Google follows the channel, reached out to me and said that they changed something with the Economic Ninja channel. And the reason why it hasn't moved is because they changed not only a bunch of people have been unsubscribed, they fooled them with the little subscribe button. They kept it lighted up and took the D right off of it. So if you don't mind checking on this channel or the other one, that was a really nice thing. So thank you to the people at Google that are watching out for me and this channel. I really appreciate the help. As yields rose in quarter three, the market prices of those bonds fell and unrealized losses stacked up. For example, the 10-year Treasury yield jumped from 3.81 at the beginning of Q3 to 4.59 at the end of Q3 in periods when yields fell and bond prices rose. Banks had unrealized gains. Now, I want you to understand this. Even though the 10-year has fallen, it has fallen nowhere in proximity to where these banks are out of the forest. They're still in trouble, okay? Because most of their assets, their held to maturity assets, were bought when rates were extremely low. And to give you an idea how bad it is right now, this is how bad it is. This is just the last 2 years, all right? So when we say the banks are crashing, you know, everything's little dip, up, barely a dip, up, barely a dip, and then boom. That's where we're at. Those aren't Christmas colors. Now, unrealized losses on securities held by banks don't matter because the maturity in 7 or 10 or 25-year banks will be paid face value and the losses are only temporary, so to speak. They don't matter until they suddenly do. That's actually not true. You see, with all of these unrealized losses, it means all of these banks are racing to the Federal Reserve and asking for a bailout. And so what happens is people like myself, talk to people like you, Wall Street's watching, analysts are watching, economists are watching, and they're going, the Federal Reserve is bailing out all these banks right now just to keep them afloat, which means the banking system's insolvent. And so what they start to do is they do things like Jeff Bezos is doing, Jamie Dimon, the head of JP Morgan, Chase Bank, and people like Warren Buffett. They're pulling money out saying, that's what they're doing. It's a jawboning, for lack of better terms. We have an open, I wouldn't call it, they don't call it an investigation, an inquiry into mortgage-backed security fraud right now at the government level. You see, everything you've been shown is a complete lie, but it's not. You see, all the truth is out there, but so few people understand how this system works. So when I say that real estate's already crashed, it has. Why do I say that? It's because velocity stopped. People became prisoners in their homes based off the interest rate and their inability to be able to sell that house and go buy the next door neighbor's house because it costs too much. Because most Americans are insolvent and they're fake rich people. You know what I'm talking about? How many people do you know that drive around really fancy cars, having fancy handbags and fancy watches, and they more than likely put them on their credit card and they didn't pay it off that month? Type 3 if you know any of these kind of people. My point being saying this is because most people don't truly know how the financial system works. And you don't need to be a rocket scientist. I'm not a financial advisor. I was a horrible real estate agent for a little bit of time, but the only reason I became an agent was to bail out one of the brokerages I owned. And I'm not even a broker, but you don't have to be a real estate broker to own a real estate brokerage. I know it sounds crazy, but it's true. You need a broker of record, like my construction company. I was a handyman and did stuff in construction for years, but I wasn't the contractor. I owned a construction company that had a contractor of record. I put together businesses. And all you need to do for financial stuff is have a broad overview and a really good bullcrap meter. I mean, how many of us need a good bullcrap meter? I mean, you just have to watch the president right now. And it's just pinging off the charts. Type 4 if you agree with that. Point being is that right now, banks are totally insolvent and they're racing to Daddy Fed for help. We are in a moment, and check this out. This is another thing that Wolf Street does a great job at. Several factors make up this decline, including, and the decline real quick, the total pile of securities held by all commercial banks fell to 5.3 trillion at the end of quarter 3, which was down nearly $1 trillion from the peak in quarter 1 of 22. When the Fed's rate hikes began, they include securities valued at market price and securities valued at purchase price. The several factors making up this decline is that securities of the collapsed banks that the FDIC, remember, we already have had a bunch of banks collapse, like they're gone. So again, when you go tell your family and friends, hey, there's something happening, you got to get ready, and they look at you like an idiot, you're looking in the eyes of a sheep, like, you're like, no, this is bad. I try and talk sheep to them, guys, this is really bad, and they don't get it. So you need to go find new friends. So it says here, securities of the collapsed banks that the FDIC sold to non-banks are no longer part of this. It also says banks have written down AFS securities to market value. And a lot of this is going to be coming out in the annual reports of some of these banks. Now that we've seen Silicon Valley's mortgage-backed securities sell for, what was it, 65 or 67 cents on the dollar, which now that means other banks holding these piling pieces of crap assets that are steamy, just put a poop emoji down below with a little bit of steam and a couple flies. Point being is now this is the base price of all the other assets that are piling pieces of poop. And I don't know how to better explain this to people. Banks have sold some securities, they say. The $684 billion in unrealized losses are above amount to about 13% of total securities held by banks. And to give you an idea, this is the total securities at commercial banks. And you could see since the year 2007 to 2008, it was flat. And then it's nice up, and then it took off. And now it's, how do you like that for special effects? This is just give me a big old, or yeah, people are putting the poop emojis on. This is what's happening. This is reality. The chart also shows how banks gorged on securities during the mega QE phase at the worst possible time when yields were at historic lows. This is what I've been preparing all of you for to take advantage of. We don't want banks getting bigger. See, during the 2008 crisis when it was flatlined, when QE or quantitative easing started, banks borrowed money at pretty much zero. Let's say about half a point, 25 basis points, or a quarter to a half of 1%. And they bought up, whoop, that doesn't work. How's that? Okay, go back here. All right, there. So then they bought up securities like you wouldn't believe for years. It was free money. They borrowed at nothing. They speculated. Well, when there's more buyers than sellers in a market, it's natural for the markets to go up. So you see, everything has been in a place where we're at right now, Think about this. Everything was fake. It was all bought on nothing. Rates are going to dip a little bit this next year. It's going to be like I got a crystal ball, but I don't. It's going to be exactly what happened in 72 to 73. And in 1980 to 81, we're going to see a dip. A bunch of people are going to race in the market, and then rates are going to explode higher. I can't even imagine what rates are going to do this next time. This isn't fear mongering at all because we've lost control of the dollar as far as world reserve currency. I think at this point, the best thing to do, and I'm just going to tell you what I do actually. No, it's not what you should do. I went to cash, didn't go to cash, but I started accumulating cash in the spring. I told you I sold a third of my portfolio off, and it was in commodities, right? That worked out great because those came back to where I originally purchased. I sold my part of my portfolio at 100% plus increase, and then I let it come back to where it was. Now it's coming up again because gold is shooting up, silver is shooting up. I never sold any of my precious metals, right? I actually bought on weaknesses. I usually come on to the other channel, the Economic Ninja, and tell you when I'm buying. But the cash is for certain deals, and there's already starting to come some deals. And the problem is we have this short little window. It's called a presidential election cycle, when there's going to be a lot of really weird things that happen because one side's trying to get you to vote one way, another side's trying to get you to vote another way. Point is you've got to be prepared. You need money in different baskets, different inflation hedges. For sure, you need to have storable food and a water filter and all that kind of stuff, but you need to be getting into a position where you can spot opportunities. There are businesses collapsing all around the country. And the one thing that we need as a thriving civilization is small businesses. But don't start these businesses now. Look to take over businesses or build a side hustle. Did you know that almost 50% of Americans are getting a 1099 this year, which means that 50% of Americans have some form of a side hustle? It's a big deal. But most people don't know how to run their side hustle right, or get into a position where they are not over leveraged and not able to take advantage of opportunities. I want you to be able to pivot, move like a lion. Hope you guys got something out of this. Thank you to everybody that supports this channel. You have no idea how much it means to me. That being said, the Real Estate Ninja is out.